Welcome back to Investing Talk Podcast. Today we're looking at Elastic NV,
Ticker symbol ESTC.
a company that's been making waves in the tech world.
Yeah, what's fascinating about Elastic is they're tackling a challenge
Okay.
that's become mission critical for businesses of all sizes, search observability and security solutions.
Right.
And they're doing it with a growing focus on AI,
Yes.
which has caught the eye of a lot of investors.
So is Elastic a stock for those looking to make a quick buck, or is this a company you tuck away in your portfolio for the long haul?
That's the question we're going to try and answer for you today.
That-
Do that, let's start with the facts.
Right.
Elastic just wrapped up a strong second quarter for fiscal year 2025, exceeding analyst expectations.
Their performance was definitely impressive.
Yeah.
Revenue surged 18% year over year, and their cloud revenue was particularly noteworthy, skyrocketing by 25% to hit $169 million. And their subscription revenue also jumped 18%, which is a great sign for long-term stability, right?
It is. Investors love to see consistent subscription growth because it indicates a sticky product, a loyal customer base, and predictable future revenue.
Right.
And Elastic is delivering on that front.
Yeah.
Their operating margins also look healthy with a non-GAAP margin of 18% and a gross margin of almost 77%.
Wow.
They're clearly running a tight ship.
But I noticed their EBIT margin is still in the red, meaning they're not turning all that revenue into profit just yet.
Yeah.
Is that a cause for concern?
It's definitely something to keep an eye on. While they're fantastic at attracting customers and generating revenue, profitability remains a key area for improvement.
Speaking of attracting customers,
Yeah.
Elastic seems to be doing an exceptional job.
Absolutely.
They now have over 1,420 customers with contracts exceeding $100,000 annually and over 21,300 subscription customers in total.
Yeah.
Those numbers are nothing to sneeze at.
Those are some seriously impressive figures, and a big part of that growth is fueled by their strategic focus on enterprise and mid-market clients, especially those eager to embrace the potential of generative AI.
Their AI integration is particularly interesting. It seems like Elastic is betting big on this technology.
Right.
They've developed some cutting-edge tools like better binary quantization, or BBQ for short, and AutoOps, which aims to streamline AI implementation.
And it's not just talk. Over 1,550 customers are already leveraging Elastic for generative AI applications.
Wow.
This signals a real commitment to leading the charge in AI-driven search and observability, a rapidly growing market with immense potential.
So how is all this positive momentum reflected in their stock price? As of February 10th, 2025, Elastic is trading at $116.39.
We've seen a slight upward trend in the price recently, but it's still hovering below its resistance level of $119.69.
Okay.
The market sentiment, as measured by the Fear and Greed Index, currently sits at 39, pointing to fear.
Oh.
So there's definitely a sense of caution in the air.
So mixed signals on the price front. What are the experts saying about Elastic? Are they bullish on its future?
Analyst opinions are divided. Some see Elastic as a fantastic long-term opportunity, especially given their aggressive push into AI and cloud services. But others are more cautious, predicting a potential price drop to $82.14 by March 2025.
Oh, wow.
Due to concerns about overvaluation.
Overvaluation, but their financials seem solid and their growth is impressive. What's driving those concerns?
That's where things get interesting. To understand the overvaluation argument, we need to dive into the technical indicators.
All right, let's break down those technicals. What are they telling us?
Let's start with the moving averages. The short-term 8-day simple moving average, or SMA, is at $101.69, which is a sell signal.
Okay.
The medium-term 20-day SMA is at $105.09, also a sell signal. These short-term indicators might make some investors nervous, but it's important to look at the bigger picture.
So short-term jitters, but what about the long-term view?
The long-term indicators paint a more positive picture.
Nope.
The 50-day SMA sits at $104.39, and the 200-day SMA is at $99.22, both buy signals. It's like the stock is taking a breather before its next move upward.
Okay, so mixed signals from the moving averages.
Yeah.
What about other indicators? Anything else we should be paying attention to?
Absolutely. The Relative Strength Index, or RSI, is currently at 64.5.
Okay.
Think of the RSI as a gauge measuring the pressure building up in a stock. A reading this high suggests the stock might be getting a little overheated, so it's a good time to be cautious,
Okay.
but not necessarily a sign to panic.
So not a clear signal for a reversal just yet. What about momentum? Is that looking positive?
Despite the mixed signals from the moving averages, there's one indicator giving us reason to be optimistic.
Okay.
The mass CD, which stands at a positive 0.29.
Right.
This tells us that momentum is building, which could signal a breakout is on the horizon.
Interesting. So potential for a breakout.
Yeah.
Are there any price levels we should be watching closely?
Definitely keep an eye on the support level at $104.05 and the resistance level at $119.69. A break above that resistance could signal further upside, while a drop below support might indicate a pullback is coming.
Got it. Support and resistance levels are guideposts in this market maze. Anything else on the technical side?
One final point. Elastic's price is currently hovering near the upper Bollinger Band, which reinforces that potential for short-term overbought conditions. But remember, technical indicators are just one piece of the puzzle.
Right.
You have to consider them alongside the company's fundamentals, their overall story, and the broader market sentiment.
Right. It's all about connecting the dots. So based on what we've discussed so far, is Elastic NV a stock worth buying right now?
That's the million-dollar question, and as always, the answer depends on your individual goals and risk tolerance.
Okay.
Are you looking for a quick profit or a long-term investment?
Let's break down both scenarios.
Yeah.
First, what are the risks for someone considering a short-term investment in Elastic?
Well, there's that analyst forecast pointing to a potential price decline to $82.14 by March 2025.
All right.
And those concerns about overvaluation, especially given those short-term sell signals from the moving averages, are worth considering. If you're looking for a quick win, this might not be the ideal time to jump in.
Okay, so short-term investors might want to tread carefully. But what about those with a longer time horizon? What makes Elastic an attractive long-term investment?
That's where Elastic's story gets really compelling. Over the past 5 years, they've achieved a remarkable 25% compound annual growth rate, or CAGR, which is a testament to their ability to consistently deliver value. And as we discussed, they're not just riding the AI wave, they're actively shaping it with innovative solutions and a growing customer base in the generative AI space.
We've talked a lot about their overall AI strategy, but can you give us some concrete examples of how businesses are using Elastic's AI tools? What problems are they solving?
Absolutely. One area where Elastic shines is in AI-powered search. Think about those times you've searched for something online and the results were just completely off, either irrelevant or buried under pages of unrelated content.
Happens all the time.
Elastic is using AI to make search smarter, more intuitive, and ultimately more effective. They're helping businesses provide their customers with a seamless search experience, which can be a major differentiator in today's competitive landscape.
So better search leads to happier customers and potentially more sales. What other AI-driven solutions are they offering?
Another area where Elastic is leveraging AI is in observability. This is all about understanding how your systems and applications are performing, identifying potential issues before they spiral into major problems, and optimizing performance.
Right.
It's like having an AI-powered detective constantly monitoring your IT infrastructure.
So instead of IT teams scrambling to fix issues after they've already caused downtime or disruptions, Elastic's AI tools are helping them get ahead of the game.
Exactly. And this is crucial in today's interconnected world where businesses rely on complex systems. Downtime can be incredibly costly, both financially and in terms of damage to a company's reputation. Elastic's AI-powered observability tools help mitigate that risk.
It sounds like Elastic is taking these complex challenges that businesses face and using AI to provide solutions that are not only more efficient, but also add real business value. No wonder they're attracting so many customers.
Their commitment to innovation is another big draw. They're constantly developing new AI-powered features and products like that better binary quantization, or BBQ we mentioned earlier.
Right.
It's a game-changing technique that improves the efficiency and accuracy of AI models. They're not content with just keeping up the bass songs. They're pushing the boundaries of what's possible with AI.
That's a good sign for their long-term growth prospects. But they're not the only player in the space who are Elastic's main competitors.
In the search and observability arenas, they're up against some heavy hitters like Splunk Datadog and Dynatrace. These are established players with their own strengths and weaknesses.
So it's a competitive market. What sets Elastic apart? What's their unique advantage?
One key differentiator is their open source approach. Their core software is built on Elasticsearch, an open source search and analytics engine that's become incredibly popular. This means you have access to a huge community of developers constantly improving the software, which leads to faster innovation and a more robust product. It also gives Elastic a cost advantage, which they can pass on to their customers.
So open source is a big part of their DNA. What else makes them stand out?
Another key factor is their unified platform approach. Elastic offers a single platform that seamlessly integrates search observability and security solutions. This means you can manage all your data and insights in one place, simplifying operations and reducing complexity. Instead of juggling multiple tools and vendors, you have one integrated solution that covers all your bases.
It sounds like they're offering a one-stop shop for all things data that's got to be appealing to businesses.
Absolutely. And as AI becomes more deeply integrated into these solutions, Elastic's unified platform becomes even more valuable. It allows businesses to leverage AI across their entire data ecosystem, from search to security and beyond.
Okay, so they've got a strong competitive position, a clear vision for the future of AI, and a growing customer base. It's certain to sound like those long-term investors might be onto something.
They have a compelling story to tell. But remember, investing always comes with risks. It's important to weigh both the potential rewards and the potential downsides.
You're right. No investment is a sure thing. What are some of the potential challenges or risks that Elastic might face in the future? That's a great question. What are some of the potential headwinds Elastic might face in the coming months and years?
Well, one of the biggest challenges for any company in a fast-growing market is competition.
Right.
As we discussed earlier, Elastic is up against some formidable rivals like Splunk, Datadog, and Dynatrace.
Yeah.
These companies are constantly innovating and releasing new products, so Elastic can't afford to rest on its laurels. They need to keep pushing the envelope to stay ahead of the pack.
It's a constant race to innovate in the tech world. What else should investors be aware of?
Another challenge is the potential for an economic slowdown. We've seen some signs of this already. And if it worsens, it could impact Elastic's growth trajectory. Businesses might tighten their IT budgets, leading to delays in new projects or cutbacks in existing ones. That could put a dent in Elastic's revenue growth.
That's a valid concern.
Yeah.
Economic uncertainty can make even the most promising companies vulnerable. Anything else?
Profitability remains a key area to watch.
Right.
While Elastic has demonstrated impressive revenue growth, they're still working on consistently turning that revenue into profit. That negative EBIT margin we discussed earlier is a reminder that there's room for improvement on this front. Investors will be looking for signs of progress in the coming quarters.
So profitability is something to keep on your radar. If you're considering investing in Elastic, what other potential risks should we be thinking about?
Finally, there's always the risk of execution missteps.
Sure.
Elastic is a rapidly growing company, and with that growth comes complexity. They need to manage their expansion, effectively integrate new technologies seamlessly, and continue to attract and retain top talent. Any missteps along the way could impact their performance and potentially their stock price.
So it sounds like Elastic is facing a lot of the same challenges as other high-growth tech companies. It's a balancing act between pushing for innovation, managing costs, and navigating a rapidly changing market.
It is, and that's why it's crucial for investors to approach any investment with a balanced view carefully, considering both the potential rewards and the potential risks.
Okay, so we've examined the potential upside and the potential downside. It's decision time. Is Elastic NV a stock you would recommend buying right now?
As always, the answer depends on your individual circumstances, your investment goals, and your risk tolerance. If you're looking for a quick profit, those concerns about overvaluation and potential price dips might give you pause. But if you're a long-term investor who believes in the power of AI, cloud computing, and Elastic's ability to execute on its vision, then this could be a company worth considering. They have a strong track record of growth, a growing customer base, and a compelling story to tell.
So you're cautiously optimistic about their long-term prospects.
I am, but I emphasize the word cautiously. It's essential to do your own research, carefully weigh the risks, and determine if Elastic aligns with your overall investment strategy.
That's great advice. Investing is never a guaranteed win, and it's always smart to approach it with a healthy dose of skepticism and a willingness to dig deeper.
Exactly. And remember, even if you decide not to invest in Elastic right now, it's a company worth keeping on your watch list. Their progress in the AI space and their overall performance in the coming quarters will be very telling.
This has been a fascinating look at Elastic NV. Thanks for walking us through the company's story, their opportunities, and their challenges.
It's been my pleasure. I always enjoy exploring these investment stories and helping listeners make more informed decisions.
That's all the time we have for today's episode of Investing Talk Podcast. We hope you found our discussion informative and insightful. If you're interested in learning more about Elastic NV, be sure to check out the links in the show notes, and don't forget to subscribe to Investing Talk Podcast. Share this episode with your friends, and leave a comment below with your thoughts and questions. We appreciate you tuning in, and we'll see you next time for another episode of Investing Talk Podcast.
Until then, happy investing.